Hello, hello, hello. Hi, everyone. Someone give me a thumbs up on audio. All right, good. So I put the latency as low as I can, so it'll be the least amount of delay, but there still is some sort of a delay. I am losing my voice, or I've lost my voices over the weekend because I held a seminar with live people. So I've been talking for 4 days. Back at the helm. Let's make sure the hair is correct. Okay, so what I'm doing this morning is a live session for strategy, so we know what we're talking about for the week. It's going to be a weird week. We have some sort of a dislocation between indices. Good morning. I'm putting them on. If you see your ticker, don't put it again, okay? So we don't double end. Before you post your ticker, scroll up and see if it's been asked for. I'm logging the tickers, so. Good morning. Is there another iteration of the Sixth Sense? I'm not sure I understand what that is. Hi, Lou. Here are the tickers I have. I'm not sure we will have time for everything. Oh, yeah, okay. I saw a movie yesterday that you all should watch. A Man Called Otto. Bring tissues. That is a sweet movie. All right. So this morning, I'm going to go through the indices. I'll give a couple more minutes for people to stroll in. I think I posted it as 5:25 and 8:25 in a couple of places. So I just want to make sure we get enough people. And look at you already hitting the likes button. Last session was pretty strong. You guys smashed the like button pretty well. Where is everybody? Okay, here's how it's going to go. You see my screen okay? You see charts okay? Yes, okay, good. So what I have on the screen... All right, Harry. So what I have on the screen is, this is how I usually start my day for the gang. I look at the indices. I usually look at the futures for the S&P and then the NASDAQ, and then whatever else I can look at. So the S&P tells me we are up a little bit, and we had a mixed market last week, which is a loss of opportunity for the bears. The bears had the opportunity to inflict some damage with a bunch of headlines, but they decided not to. Whatever damage they inflicted was concentrated, and then it rolled off into something else. So we had some strength in one area and some weaknesses in the other. I have to tell you that the market is dislocated. The short-term rates are huge, and the longer-term rates cannot catch up. So we have that inversion. And in theory, the inversion of the rates, so the short-term rates are higher than the long-term rates, makes it illogical for banks to lend money. Because in theory, banks borrow short-term and lend long-term. So if their borrowing costs are higher than the lending, then they don't lend money. But I don't think it's working out that way right now. But anyway, it's above my pay grade. It's a concept. It's in there. The 1 month and the 3 month yield from the government bonds are huge. Like really huge, almost 6%. whereas the 10-year is 4. That shouldn't be. Okay, looking at the big picture, I see like Google is starting off red, whereas Microsoft isn't, or Apple isn't. So they're buying one thing and selling one thing. All right, so I have not updated lines on the chart, and you can see the lines from before. I had resistance and an opportunity. The resistance is still playing out, so I can extend it. Ukraine, buyer zone, buyer zone. Look at all these. We cannot get out of them, whereas the NASDAQ has already blown past all of this stuff, bounced off of it, and is trying to make a higher high. Those two things, that's the battle. The S&P cannot catch up with the NASDAQ for some reason. We have some sectors in the S&P that are bogging it down. During the day, we look at the XLI, XLV, XLF. They seem to be the big ones in there. So I'm not sure how they're going to bust right through. It's like they need a headline to cut through all of this, or a headline to drop us 5 to 7%. So here's the picture, the dilemma. The S&P has all these lines. I put a circle and I said, amazing test for the bulls last week. It extends. We cannot get out of it, whereas the NASDAQ has already passed it. And the small caps is nowhere near it. What is it? It's the February highs of this year, but these are levels from 2 years ago. So we have one index that can't get out of its way, one index that's waiting, come on, come on, come on, and then one index that's almost breaking down. So this is a problem. All right, so I'm adding SOFI and TT. All right, what do we do about this? I continue to drill down into it. I can tell you one thing, that if I go here, this is the S&P look on multiple time frame via the SPX. So there's no overnight junk. You can see how 4-hour time frame here, 2-hour time frame here. So we're stuck between two lines. I remember drawing these lines last week, and we have lines below it and lines above it. And so we're right in the middle. We're going to ping pong. Hello. We're going to ping pong inside this range until we bust out of it, up or down. Usually the trade goes, you don't buy longs here, you don't buy shorts here, and you try to trade this range, and then if they breach one side or the other, they go in that direction and they overshoot. You can see that battle very clearly. Short term, we are like this one right here. It tells me the S&P as of Friday, this does not have overnight session, was running into prior fails. So it probably was extended on the 1 minute. Yes. So even if we had a dip this morning, we would be fine. I'm not sure if we will have some sort of a freak out between now and the open, but so the bulls are starting the week with a mild advantage. So this is what it looks like right now. We're up 0.3, but that can change. All right, here's where we're at. Here is where we were. When we go into a prior fail, short term, we might see a little dip. So if the market dips a little bit this morning down to 41.28, we shouldn't freak out. They also would like to revisit the overnight ranges during market hours. So what do? Nothing. I continue on my plan, which is I'm looking to buy dips for higher highs. And my assumption is that the S&P will break out. From what level? Like, will we drop? Yes. And we do have support, and the support has held. If we drop 5 to 10%, I will definitely try to get long again. Without a new shoe to drop, my assumption is still very simple. 45 before 35. If we go above 4,200 in the SPX, for example, we will get to 43.50. We should fairly easily and higher. Meaning the bears will need something to drop us. This week, we probably have a dozen Fed heads talking, which means, including Powell. I believe he speaks on Friday. Yay! No, not yay. These guys cannot shut up. I'm not sure why. They have something to say. Hi, Gint. Even though we don't need them to say anything. They met, they told us their opinion, they told us their policy. Why on earth are they still talking? And dozens of them, I have no idea. Imagine if Amazon has its earnings report and then every director wants to say something about it the week after. Why? But that's how it is. The dilemma is QQQ in a breakout, SPX cannot break out, IWM must hold a level. If the IWM loses level, I doubt anything will happen on the upside. So 3 to 5% dips are fine. So how am I trading? I had calls for Friday for the IWM. I've been selling against them. Now I want to be long net out of the week, assuming that any dips will be bought and we don't have any new headlines. By headlines, I mean a new reason to worry that is not in the news right now. I don't mean like somebody said something about the rates from the Fed heads. No, we know this stuff already. I mean something new that we didn't have before, like the financial crisis. That was something new. Okay, these stickers I put in front of you are the ones we're going to do. We are doing. So let's go ahead and start charting properly. Actually, the SPY here, I'll go. This is the SPY with my notes from last week. Okay. You see this box? If you're a member that's been reading my notes for over a year, you probably have seen the same box, and I keep dragging it. We cannot get the f out of it. And this one also months old. It was a dark pool level that is no longer a dark pool level, but for some reason it's right here right now. Yeah, hi Doc. So important support below it. So we have a bunch of support, a bunch of resistance. You can see it. February resistance. This has been here since February, but it's also been here since the Ukraine war and the January before that freak out of whatever the hell his name is. So this is still available. We just didn't take it yet. We're stuck in muck. All right. So the SPX version of it is like this. If we do it at 30, this is the SPX version. Okay. This was my guess for the close on Friday. Where did we end up closing? Not Friday, on 5/10. Anyway, Friday I was out because I was training some people live. Anyway, we're still stuck in a range. The SPX needs to break above 4,200 to clear it, and then we won't look back. I think the 43.50 would be a foregone conclusion. So I want to be biased long. So I'm buying dips short term. I'm also buying dips mid-term and long-term in stocks that fall on earnings, like TWLO last week. And I believe the TWLO trade delivered profits right away, although I'm still in it. Okay. We'll add BITO to the end. Sure. BITO added. All right. So I said I will do SPX, QQQ next. I'm pulling up the charts with my old. Okay. Check this out. If you're not a member, this chart should tell you join. Check this out. So before before this price action unfolded, I had an arrow down for us on one morning. I said, if dip normal, look at where we dipped and where we bounced. And during this dip, I said, this could be the price path after the dip. Check it out. Exactly how we traded it. So Friday, I did not have arrows because I was not working for the charting. So this dip happened on Friday, and here we are back. All this is normal. So now if we hold 323 in the Qs, which should be normal, even 322. Last case scenario is 320.2 versus the high from last week, which is the Friday pre-open. So if we take out, I'll put an alert, 327 and change, which was the high here, then probably 329, 330 is the foregone conclusion. Which is what? Higher lows, higher highs. And the Qs have been doing it. And the Qs have cleared the February highs, which are well below. Let's see here if I take these out. All right, so these are the February highs that the S&P cannot clear. This blue W that's drawing itself is bearish, just like the red one was here, and it dropped us to target 1. So target 1 of this blue thing is, I can't see it. Oh, it hasn't drawn itself. So I would think 305, 308, 302 would be normal dips if it actually turns red. This is just talking technicals. But in real life, it says we're trading a channel. We're coming up against a prior fail. So expect a small dip and it would be normal as long as you hold progress. All right. So he's kidding about the brand new crisis. I don't know what the brand new crisis. Stop listening to the freaking news, people. Stop listening to news. Like somebody this morning said, SOFI, the analyst seems to disagree. Somebody downgraded it to 250 and other people say it's the future. Anybody that trades like the analyst is guaranteed mediocrity at best. No analyst sticks their neck out for anyone. And they're freaking morons, all of them, the way they write. They might be smart people, but they say some asinine stuff. Stop listening to the analyst. What is the analyst going to tell you that you can't find out all by yourself? All right. IWM, let's go to that one. The IWM is the collective of 2,000 stocks that are not large caps. They're not small companies, but they're definitely not large caps. And if you go to the daily, they're holding on to dear life. That's one way of saying it. The optimist will tell you it's holding support. It's going to bounce and come up and catch up with the rest. Fine. If that's the case, then it needs to rally 15%. 7% drop, finish another 9%. Okay, can you start already? Because if you don't, you're going to lose support and fall 15%. Why? Because that's the support and that's the support. You lose this one, you're going to trigger that one, and that one will take you down 10 to 15, maybe even 20%. So you see the critical issue we have? We have bulls in charge on one section and no one in charge in the SPY, and bears in charge of the IWM. Who's going to win this? There's going to have to be a tiebreaker of sorts. Either a clear path up or a clear path down. It's going to be an emotional trigger. Hopefully it's an upside one. Okay, I'm going in order. And the next one we mentioned was, let's go here and do that one, Google. So Google has been hot and cold, hot and cold. It's a cash machine as a company. It's got artificial intelligence working for it. By the way, we only have 35 likes. Last time it was insanely popular. Let's get some people in, retweet whatever I tweeted, and don't hit the like button twice. I think you unlike it. So I like the company. I don't want to chase it. It's some sort of an inverse relationship with Microsoft these days. It's pretty weird. As a chart, let's see, let's go to a daily to get some clarity. You can see how it's running into prior fail, that whole area, and a level of 125 that this is GOOGL that has been difficult to pass. So the breakout is great. So a dip into 108, 109, 112 would be healthy and would be one I would take. A dip into 104, even better. It should finish the target, which is just above 124, which could take us above this one. I don't like to chase like this, but if somebody's long and they want to stay long, that's fine. If somebody's looking to get long, I think it's best done on a dip. So here's what is going to happen for Google. It's going to follow the market. Confidently, I would say if the markets are higher in the future, then definitely Google should be higher as well. It has no issues on by itself. A lot of people talk crap about it every once in a while. Those people are not being realistic. Microsoft is more open to dips because it has rallied harder, in my opinion. It had a breakout here. I said, what if it dips a little bit? That's fine. It would come back and trigger an inverse head and shoulders, and it did. This is an eyeball target of that inverse head and shoulders, but it has to cut through a lot of resistances. So for me, I can't get long in here. I would buy the dips, as they have been. This is a daily chart, not a lot of details in it, but this is a seller zone. It doesn't mean they can't cut through it, but if it dips towards 275, I shouldn't be surprised. 280 would make a better entry point. Nick, it's 310. Yes, but that's how it happens. They rally and they dip. They rally and they dip. Hey, thanks, Doc. So vulnerable to a dip, yes. Reason to short, I don't think so. Buy the dip, absolutely, in this environment. When I say buy the dip, it means use dips to get long if you want to. This looks like diagonal. Okay, so nothing wrong with the company. Management super good. At the forefront of artificial intelligence. So long-term statement, healthy. Entry points for the short term, I will take dips. I wouldn't chase it. All right, AMD. I'm starting with this because it gives me multiple time frames at the same time, in case you haven't noticed. I have slow charts, faster, 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 faster. Okay. Also extended. It's almost like a broken record in the NASDAQ. On the 30-minute, if it loses 93.5, it could fall into the 89 to 90. That would make a better entry point. Short term, what the hell is this? What happened on Friday night? What the? Oh, that was just intraday. Okay, never mind. Wow, that's a pretty wild day on Friday. I wasn't watching the market. Okay, so on the 5-minute chart, maybe it bounces back to 97 if it can hold 93 or the floor from Friday. Short term. Longer term, also, it's not an obvious entry point just because it's at prior fails. Now, if they take out the prior fails, look out above. I bet you that would be a good catalyst upwards. And the dips would be bought. They averted a head and shoulders, which would have been normal. You're in an ascending channel, I bet you, of higher lows and higher highs, and you are. You can draw a parallel channel here, and you can see that from this bottom, higher lows and higher highs. So if they take another higher high, they go to here. Don't short it. The 100 to 108 area is critical. It has been critical. That's the neckline that took it all the way down to here. It's right there. So it's not going to be easy, but once they take it out, they can get to 128. So long term, that's fine. Meta, we're just going through the tickers one at a time. And you can add your tickers if we had time. That's a big slide here. I don't remember the headlines. It's been insanely bullish. And I've been telling people don't short it even if you hate it. There were several necklines and the target's somewhere around 260, 240. So it's in the target area. It could dip. Buy the dip. Better than chasing it, but most definitely don't be tempted to short it because you're shorting an idea. The metaverse is an idea. And they can lie their way or trick their way through it for a long time. Just ask Tesla. For a long time, it was just an idea. Short term, 215, 210 would be buying opportunities if you maintain this amazing trend. I'm not one to be this brave. If you missed it, just forget about it. Buy the dip when it happens, and it will happen at some point. Somebody will hate it somewhere. Okay, Amazon. Strong company. I'm worried a little bit about the American retail consumer spending. We should find out more about that this week, retail clients. Although Amazon did report weak sales, but it wasn't a disaster yet. I'm afraid for that. People say that the consumers stopped spending. I haven't stopped spending. And people say they're stopping spending, but I haven't seen that in real life yet. So we haven't seen a huge drop-off, although the reports of it have been told. Thousands and thousands of people getting laid off. And everybody says spending is falling off a cliff, and it's now China that's carrying the world. I think it's more of an idea. I don't know if that's true. So I will wait to see if that is true. So pay attention to the retail reports this next couple of weeks. Walmart might be able to tell us. All right, so Meta, Amazon itself. If the markets in the futures are higher, then I'm confident that Amazon is higher. Higher lows. My beef, if you've been with me, is what the hell did you do with this reaction to the earnings? That long stick from the earnings. What's it going to take that out? It's going to take some phenomenal push, either a slow, steady up this week and burst out of it, or one giant, somebody said something and it goes to 132. Look at it. It's going to be a concrete wall until it's taken out. So hopefully this higher low continues, inching up. Maybe by the end of the week we'll be up at it, and next week we'll pop above it and go to 136. That's the dream. That's the best case scenario. And I'm a fan. Apple, let's see here. Clearly nothing wrong with the company fundamentals, although my concern for Apple long term is that it's still an iPhone company and they need somebody other than Tim Cook. Technically, this is pretty bullish if they can take it out. Look at it. It's a broadening wedge, and of late, from December, from June, the June correction was very violent. The December correction Weird that Apple made a lower low in December and the market hasn't. So Apple's coming up from a deeper. Imagine if Apple hadn't taken that extra dip, they would have taken that out and it would have been in the 200 already. Don't short Apple. If you're long the markets, don't short Apple, because the markets are not going to rally without Apple. And if they can take out the prior fails, probably 176 can bring 188, 192. And if that's the case, that means it's in an all-time high. Are we kidding with that statement? Did you hear that? Okay. On what planet is Apple going to make an all-time high when the markets cannot break out? So the S&P will definitely break out by then. But how will it happen? I don't know. Let's see. Shorter term, this is also Apple, a 2-hour chart. You can see it. Look at that. You can draw a line at 175. So Apple above 175 this week, I would stay long the markets. That's pretty insane. Wow. I can't believe this market. It's so weird. It's so exciting. NVIDIA. We talked about AMD. Let's go to NVIDIA. That's the daily chart. Totally vulnerable. A dip towards 250 is fine. NVIDIA also is running on other new things like AI and such, so don't short it. You can short it technically against the prior fail, except that the prior fail has not worked for a while. And it's kind of like spread out. Look left. There's a whole bunch of peaks, not one big peak. But starting longs here as an investment for the long term, I think is a flat out mistake. But Nick, it could go to 400. Yes, it can, but not with my money, not starting here as an investment. And if you're absolutely dying to invest in NVIDIA right now, I would make it a partial investment, okay? If somebody wanted to short it, this was a conversation I was having with somebody, is that this will be normal dip, and I would do a debit put spread. And somebody came up with the idea of doing a debit put spread and a credit put spread below it to finance it. That's okay. You can do this in a company you believe in. Thanks, Doc. So everybody wants to be long a stock once it becomes really popular. And that's how everybody starts to chase things. If you feel like you need to do something, don't do it. Feeling. Chances are you're feeling it at the wrong time. Make sure you consult the charts to have your brains engaged. You can see that we have a tight range or a clear range. It's not very tight because it's moving pretty fast. Dips into 278 within $2 are buyable, and a breach of 292. That means whatever's going on is going to continue to go on. Here's a different time frame. You can argue that if it doesn't get back up to 287, it's probably going to go to 278 first. Did you hear that statement? If it cannot get back up here and hold, it's probably going to come down here first, which would be okay. Part of the normal price action, which is this arrow. All right. So don't be surprised if that happens. I'm changing time frames. So now we're on a 5-minute chart. A lot of sellers. It's starting up green, but it's going into a lot of sellers. So don't be overly enthusiastic. Looks like I have Amazon in there twice, so I will knock off the second Amazon. All right, so now we have Disney and then Qualcomm, in case you've lost track. I'm just doing the tickers in a row. Scroll up in the chat on YouTube and you can see what's coming next. All right. Uh-oh, who is this? Disney. Okay, I remember. So Disney reported earnings and it fell on as a reaction. A couple of red ticks on the dailies. It's falling into a prior bounce area. I remember, I think I sold puts or put spreads in that one. I just don't remember what levels. Oh, okay. I do remember what levels. So members, you know what they are. I'm still in it, I believe, and I would still be in it. Now, technically speaking, this is a daily chart. If they lose this area here, they could end up down here, which means that they would trigger this one to be much lower. But the way to read it differently is that this is super strong support and it has backup support. So I think 85, 82 will hold even with a little market hiccup. On its own, it should definitely hold it. But if the market corrects, it will probably go into the low 80s. Let's go see shorter time frame to see if we have any clues. One could argue that it could go back to 95, 96 based on this green thing if the market allows it to play out. Yep. So there's nothing fancy. The Friday needs to hold. Friday levels need to hold. In Disney, Qualcomm, back to the longer term, last support from here. Let's see if it holds. That arrow was there, I believe. I don't usually draw arrows after the fact and leave them. So some sort of a neckline right here that broke down, and the target of that neckline is about this arrow. Whether they fill it completely, I don't know. It has support here. Now Qualcomm is an okay company all by itself, so let's see if it can defy the market and go down while the market is not going down, or is it a harbinger of more downside in the market itself? Like, is it telling the truth? Shorter term, I don't have anything except the Friday low for now, so you better cross your fingers that the Friday low hold on different time frames. I'm just traveling through different time frames and the same ticker. This is something you should practice doing, by the way, so you're not focused on one area. Square, I do like the stock. I will sell puts on dips if I'm not long already. It had a wow, it's lower now than the dip it had on the whatever downgrade from Hindenburg report. That is interesting. Although it does have a lot of support and a lot of tails, so a lot of buyers are lurking. This looks like a head and shoulders that it triggered. So it could come down to the 40s, maybe even the high 30s, based on the chart itself. I don't think it deserves to be down there with the business it's running now. PayPal's under fire as well. And I hear SOFI this morning, somebody downgraded it. Hey Charles, thanks for mentioning that. So Charles tells me that somebody downgraded the price target to 250, and other people are saying, other quote analysts are saying up. I said, if you follow analysts, you are doomed to be mediocre at best. I haven't seen one analyst worth that puts out a write-up worth anything. How often do you see somebody state the obvious, which is like duh statements? Almost always. Almost never do they say something that says, oh, there's an idea. No, it's always after the fact. Okay, so Square is struggling for reasons unknown. The business is healthy and it's growing. So if the Hindenburg research is correct, then maybe there's some risk from that. But the company flat out denied it. And this was the flash crash that it had that we made money on. If I'm not long Square and it dips this week, I'll probably get long it somehow. I still like the prospects. I use it all the time, so we'll see. If the P&L is doing well, why are we shorting it? And crypto is not falling. They used to trade together. Crypto, somebody said, oh, crypto fell on the weekend, but then I checked my quotes and crypto was almost 27.5. So I didn't think Bitcoin, so I didn't think it was falling. So it was more perception. So let's see what happens with Square. I'm interested. TWLO, did I mention TWLO already? No. I am long TWLO. I bought the dip, as they say, when it fell on earnings by selling somebody a panic lottery ticket. So let's see if I get assigned. I would take the shares if I do get assigned. This is a stock that rallies fast, so it's not for the faint of heart. Be careful with it because it does run fast and it does wrong a long way. Technically, it should have support from this white rectangle. Those are buyers. It's not my opinion. That's what they did last time they were down here. This is a target, but it's not likely. Those are my words and my assessment. I could be wrong. So I am long. I'm not all in. I would get assigned at 39 and take the stock. I will not defend it. And as soon as I get assigned, I will start selling covered calls. And even if I do get assigned, I will not have a full position. So I can add to it if I want to. Not immediately, though. All right, short term, you're just looking at the recent bounce levels from last week. CROX, a stock I would never trade, but kudos for you for trying. Same as TWLO, it has support. If you lose this support, you can end up at 96, 92. So don't know the fundamentals. I'm not going to say anything about the shoe itself because people buy it. There is a little factoid about it, and the movie Idiocracy, go check it out. It's pretty cute. 123, 124 is a problem. If they don't recover 124, I think they bleed lower towards 102, maybe even 98. And if they get to 98, I think they get to 92. technically speaking. This is a tall mountain to climb. So that is CROX. Okay, next we have J&J and then Ford. Okay, let's go with J&J. A stock I will never trade again. It's too violent for what it is. It has a lot of support below 156 and a lot of resistance above 166. So don't know what you expect. Short term, I wouldn't expect much. Ping pong inside those ranges. 170 looks like a pretty bad seller up there. And a big neckline. Interesting. But a hard buyer down below. If for some whacked out reason they lose 150, look out below. But that would mean the market in general is probably struggling. So Ford is next. I don't like the fundamentals in general, but in thesis, but that report was impressive as far as sales growth. My concern with Ford and GM is if indeed they want to switch over to electric vehicles and they don't make money on those, how's the P&L going to look once they start selling a lot of electric vehicles? So do your own homework on this one and correct me if I'm wrong. In theory, I would not touch these P&Ls. Tradable levels are here. So you can see that it has a lot of support through 11. So from a trading perspective, I get it. It has a lot of sellers through 1230. The closer it is to 1230, the less likely I would buy it for trading purposes. So decide what you're doing. If you own shares and you're looking to add, I don't know why you would add now. And if you're looking to own shares for the long term, I wouldn't go all in. Leave room to add. And stocks fall for no fault of their own sometimes. So you can do all the homework you want on one company and then it falls on another reason. On Semi is a stock I would trade, and I don't remember if I did trade it for the gang. From here, I think down is easier on the daily chart. A lot of resistance above 84 and a lot of buyers below 76. So if it falls to 76, that would be my, look at it, bunch of sellers and a bunch of buyers. So if it falls towards 76, would be a better entry opportunity for a trading perspective. This did not happen. They averted disaster with this rally being much bigger than expected. So I thought they would stall at 76, but they didn't. They just punched right through, and now it became floor again. Like right here, I thought they would stall. All right, so that's on Semi. Netflix, have we decided to do Netflix? Yes. Not an obvious entry point. I did watch a show that they did that's pretty nice. A Man Called Otto. You should watch it. I don't know. I don't know their fundamentals. I read something about. I was excited that they decided to cramp down on the passwords, but they said that effort hasn't even started, or they delayed that effort for some reason. So, what effect is that going to have on their bottom line? I bet you most people will end up getting their own Netflix, so it should be a good thing. Even if it dips a little bit once they launch it. I mean, who's not going to pay $12 if they love Netflix? That's my, especially if they don't have cable bills. So a lot of support on the chart and a lot of resistance, but it's a hard line. It's kind of like the S&P. Wait, how did we fall back in here? That's how. Netflix. I'm trying to find a time frame that helps me. All right, there we go. This one will help. This is a daily chart. Prior fail from April right here. If you take it out, you get to this fail. So is it going to be easy? I don't think so, but it is an opportunity. So going into a prior fail is not good to get long. On dips, yes. So that's the daily. Here it is in a 2-hour look. And you can see how maybe taking out 348, 349 could help you just bust right through this one, which is 351.52. In which case, it can rally 20 points, maybe even 30. So you have higher lows attacking a neckline, and the bears need to defend it hard. Otherwise, boom, it's going to burst out. It is a violent stock, so if you trade it, you should have a good stomach. Lennar, I don't know how these guys are still making money. Shortable with stops. On the 2-hour, they're extended. On the 1 hour, you can see support around 109. and a catalyst and resistance at 116. It is mind-boggling how well this stock is doing, but I think it's also scary. So this is a daily chart. It's going into levels from December of 2021. Wow. Okay, so this is where the market collapsed, and these guys are up here, and this is the only sector that got hit hard, real estate. What the hell? Interesting. Shortable, that's all I can say. How would you short a stock like this? I would never sell it naked short. I could sell a credit call spread and or buy a debit put spread of sorts. Maybe a put butterfly modified so it's easy to manage. A combination of those would work. Put diagonals, put calendars if you know how to do those. Anything that is not so harsh, because it's a winning stock. But technically, boy, it can come down to 96. We'll see. Pretty interesting chart, whoever this is. If there's an earnings report, forget about doing anything with conviction. It's going to be an emotional response. SOFI, I hear it's downgraded pre-open. Yep, it's down in the 470s again. So I had calls and they were green, and now they're back to red, of course. I think the business is great, a great idea. Whether this company is great or not, that's a future statement. I don't know. Somebody downgraded it, and I would never short a stock based on a downgrade. I would never ditch a stock based on an idiotic downgrade. Although the price target downgrade is harsh, down to 250. So they better have explained why. I haven't read it. I'm just reading somebody else's comment on it. So keep that in mind. Not my statement, somebody else's statement. And what's with this 64 likes? Are you kidding me? Okay, so please look at it. It's dark out here. I got dressed at 5:20 in the morning for you. Actually at 5. Okay, so let's do better. SOFI is technically okay with support, but that downgrade is harsh, and I need to go read more about it. Even though I think one thing about the stock, I want to see if they said something that would change my mind. And I'm not all in, okay? I could add if I want to. TTD. This was pretty violent last week. Look at these candles, these wicks. So you have an unbelievable seller into 71 and an unbelievable buyer below 59.58. What do? If you sold puts or put spreads, you don't do anything. You're going to win most likely unless the markets collapse. And that would be my statement. If we're inside these wicks down here, that's support. So you would need to not back out of your longs or take longs if you believe in the stock long term. Let me see here if we can back into a daily chart. Okay, this is on the daily. We have had selling zones here before. So I'm in a buy the dip mode in this guy. If it falls towards 56, it would make for better entry points than exits, clearly. And the hope is that it would curl back up and take out the failure from last week. So taking out 68 will bring you into 80. But that's the big picture. Then you drill down into the smaller picture and you see these wicks we just mentioned, and smaller even. So support at 61 and below 60, and a lot of resistance above. Here it is on a 5-minute basis. It gives you a 60.5 and a 65 levels to deal with short term. Okay, let's see here. TTD, PayPal. Same comments as Square. Business is great. The stock is trading like it's going out of business. I am long at 55, so I may need to take shares at 55. And if I do get a signed share at 55, I will just sell calls against them. That would be my mode of operations there. I cannot explain why it's falling. If you read the P&L, there's nothing that signifies that that's an indication of the deterioration of the business. The P&L is still healthy. I don't think they have any issues with the balance sheet, so cash, etc. So I'm not sure why it's trading that way. Fundamentally, I can't explain it. Technically, it's also a conundrum. It cannot find a floor. So maybe I should just give up on it if I'm frustrated. I wouldn't buy calls. No way. What I did is sold puts against a whoosh down. and it looks like it's going to get tested. My risk is down here, so I still have 10% buffer, maybe 11. We'll see how it happens. All right, so these are the tickers that I had seen so far. No CEO on where? PayPal? They don't have a CEO? Capital letters. No CEO, no CEO, no CEO. Which company? Oh, you want to do Walmart? We can do Walmart. Oh, somebody wanted BITO. Wait. BITO, in case you don't know, okay, Schulman leaving, and he's going to leave the company with no CEO. That's fine. The company is going to run without a CEO, especially if Schulman is not a star, and he's not a star. Okay, so BITO, this is the ticker that represents crypto because it tracks the futures of Bitcoin, and it is down, but that's an ascending channel, so that's proper price action. I'm long crypto and very profitable, and I haven't done anything with it. We've been collecting some good dividends on this guy, so I am long BITO. I did not add, I did not close. It is a blend of investment and trade, so I will turn some of the stuff into investments and the rest I will trade out of it, but much higher than here. Short term 16.2.3 is going to be a problem. I wouldn't add a lot. If I haven't taken any Bitcoin, any BITO, and I want to nibble, that's fine, but see if you can find like a really red day when somebody's talking pretty badly about it. Let's see if this week, if it loses 14.9, it might come down to 13. That would be a good entry point. Okay. So now we have more tickers coming out. There you are. UNG, Airbnb. Okay, BSX. Are you asking for BSX? What is that hashtag BSX? I don't know. We'll see if BSX is a ticker. All right, let's go UNG. UNG, I traded it for the group really well, which is weird because I don't know anything about it. If you ask me, I would buy shares and hold on to them for a big rally. But I don't know anything about the fundamentals, why it has to have a big rally. I'm not sure. Technically, you have hard support, but it's not a floor. And this is not an all-time low. If you need to see the all-time low of UNG, you need to go to NG, the futures. And I believe it has 20% lower before it hits an all-time low. You're welcome, Nave. So 740 looks like a pretty big catalyst if they ever can take it out. I would hold shares. Calls, if you're active, okay. 7 through 710, 720 is resistance. So it's better to buy it on dips into 650 and 640 if you're buying calls. I've even sold puts for the group in that one, and we made money twice. And bought calls or call spreads or credit put spreads and credit call spreads. I don't remember what we did, but everything we did, we won. I just gave you the levels in question. You have support, you have a lot of resistance. Long term, you can have a swing for it if you are, if you have a good stomach. That thing moves very fast. Okay, let's go with Walmart. I believe Walmart has earnings this week, and if so, then don't worry about what I say. Look how easy it is for it to break out. If it breaks out before the earnings, I would close my longs. It has a catalyst here. My goodness. So Walmart stock is doing well, which is pretty bizarre. Wow. You take this out, you have a lot of upside. Buy the dip into 149, 148, I guess. Anything below 150 has support, and the earnings are coming. So faites vos jeux and place your bets and hope for the best. I think the options are pretty cheap for Walmart in general, so you can probably buy stuff rather than sell stuff. Like I wouldn't sell puts in Walmart. Even on days where it fell 15%, I couldn't find anything attractive for me to sell. Okay, Airbnb, I would be long in this area where it's at and a little bit lower. It rallied a lot, so I wouldn't go all in. So if you go to, this is what, 4 hour. If you go to a daily, you can see that it rallied a lot from here to here, and it gave back about half normal. So it has a lot of support from here through 100. You can see that 100. So from here, if you twist my arm, I'm okay being long if I'm starting here. Google was the first ticker we did, Victor. So you can scroll when we're done here, there'll be a video released and you can scroll back to Google. Rallies into 115, 120 are going to be met with sellers. You can see it. When they get to 115 here, 120, there's going to be resistance and they could curl right back down. So whoever bought it on Friday was probably smart down here. And no reason to be sorry. Appreciate you being here. Just hit the like button before you leave. That's it. Make sure you do that. Okay, BSX. Not knowing what that is. Let's go see. Boston Scientific. Okay, I know what that is. If you twist my arm, I'll buy a put or a put spread in here. Great stock chart though. Is this an all-time high? Yeah. So I wouldn't buy it, but I don't, this is one of those things where you say, I missed it. Okay. What are you asking me for? When you give me a stock that's an all-time high, what do you hope I say? Yes, you have my blessing to be piled in, all in. No, I wouldn't short it. I wouldn't go long it. If I love the stock, I'll put an alert saying, let me buy it when it dips, if it dips, and I take it off my screen. It's too high to short and it's too hot. It's too hot to short and too high to chase. It's a good stock. Whether it's a good company, it's up to you. So if you want to own it for 40 years, then buy it now and don't worry about it. And I still wouldn't buy it. I would buy it on dips. And remember, stocks dip for other reasons than themselves, right? So if you think, no, it's never going to dip, I think you're wrong. It will dip. It's just a matter of time. All right, so Oxy. Now we're getting people. Now second shift is coming in. You should put your bell. You should subscribe to the channel and put the bell on so you can get notified for streaming. So this is a special streaming session because I didn't do a strategy session for the gang on Sunday, which I usually do. So this is a makeup session for that. We're falling into support on Oxy, and I don't like this stock. And I'm going to tell you, if it loses 55.50, it could be in the 40s. Okay, I've said that for months and people didn't believe me. And now it's more real. Even though it's hard support, if you twist my arm, this is a chart that I would go long into support with stops. But if you lose the recent support, you will be in the 40s, like mid 40s, maybe even 44. Okay, I'm not forecasting that, but I'm telling you, if the support fails, it will go there. Buffett, no Buffett, I don't care. That's what the chart says. Rallies into 65 will have sellers, just so you would know. Going in closer in time, yeah, 59.5 is tough. Yep, that's my statement, and I'm sticking to it. Let's see here. I'm running through the tickers that you guys are posting. Hopefully I don't miss anything. PCG, I'll add it. PCG. I feel like somebody else asked for it in the room. PCG. Okay. 1 hour, 2 hours for 1 day. Wow. We are at 87 likes. I'm gonna catch my breath. Somebody asked me why am I out of breath. That's because I need water. A 5-day-old water. I'll take it while I'm drinking. Hit the like button, please. This is the OnlyFans portion of this the show. So I have silver, gold, AFRM. Zim, really, Anton? Okay, we'll do Zim. Silver. We're almost there. Should I whistle? SLV. Zim. I walk away from Zim. GLD, I guess we'll put SLV, GLD together. SLV, GLD. Shopify. I'm being picky right now because we're running out of time. I'll put Affirm next to Shopify. Okay. Are we at 100? I'm at the delay. Are we at 100? Rivian? Forget about Rivian. I gave up on Rivian. 98, okay. Too short? Come on. Don't hit it twice. You will take one out. 99, come on. We must be. Okay, there we go. All right, we'll go with silver and gold. PCG is not for me. It looks like an all-time high. It isn't. Look at what you're buying. That is pretty old, so it might not work. So you trade it short. I don't have a clue. You can short it, and if you lose the high from last week, just exit your short. I would not get into it right here. Okay. All right. So we're going to skip that one. Go into SLV. So silver is a good meme stock and cheap to trade. So the cheap to trade meaning the premiums are cheap. So if you make a decision on whether you want to go long or short, just pick one leg at the money or in the money and go with it, and then stop out at X%. Okay. You do have support below, and you do have resistance above. If you take out 24, I think you can get $1.50 out of it. And if you're looking to get long on a dip, I think that's probably the best thing to do. But you should know that getting into 22.8, 22.9, 22.7, there's going to be a lot of sellers. I'm not a fan of being long gold right here, just because of how it traded. In fact, I shorted it and won for the group, and I would probably short the next pop again. So I don't have anything against gold. I'm just talking chart-wise. It's an easier short than a long up here, just because it's failed a couple times. Hi, Austin. So it's easier down than up on gold. So silver and gold are not my favorite. Somebody mentioned Zim. I'm going to advise you to forget about this stock. Please forget about it. If you remember, we did a couple of times well with it, and then we said forget about it. The P&L is too wacky. The industry too crazy. Not for me. It pays weird ass dividend. Bye. Technically, the chart is not going to help you. It is not going to help you at all. Thanks for the like. 104 already. I appreciate that. Shopify, good company. Controversial management because of what they say and when they say it. One day before the earnings, they came out and said we're selling a business of sorts. So I would not chase it. I'm a buy the dip in that guy. And now I'm less of a buy the dip because of how they come out with these headlines. You get ready for the earnings on the earnings day, and then before the earnings day, they say something extravagant. That's bizarre. So it's a no touch for me up here. And buy the dip, what dip? It's so high right now. I mean, how much of a dip are you going to get? Affirm is out of the last trade in Affirm is I sold puts at 10 and we didn't get a sign and we made money. I would repeat it. On a bad day, I would repeat it. I'm surprised it's not falling with SOFI. They usually trade together. So maybe Affirm did actually place a bottom. If you own shares, that's good. I wouldn't add. I don't have a reason to add. Okay. Let me see here. What time is it? 6:20. I think we maybe can do a couple more charts and that's it, because we have to go and get ready for the day. I haven't been trading for a couple of days because I was in a seminar. So met about 40 people. It was awesome. See if you can join the next one. If you want to learn charts, June, reach out. I still have spots there. Rivian, I give up on Rivian from a fundamental basis. KRE, okay, we'll do KRE since it's the banks and it's important. So the KRE represents the regional banks, and now I don't know what to believe. Do we have a financial crisis or we don't? I lost money on FRC. I made money 3 times, and the last one I got assigned shares, so now I own 50-cent shares in KRE. So I'm done. I'm done with the banks. If you want to bet on the regional banks, that's probably a decent way to do it, because if a dozen are in trouble, the rest will survive, and that represents the whole basket. So the KRE is okay to hold. I don't think there are going to be a lot of upside, but maybe there is. Okay, we can do Uber. They owe me $5. No, I'm just kidding. That's an inside joke, by the way. Okay, Uber. I used to like the business. I'm now growing back into it. Technically, 38 is a pivot, 38.50. There are buyers where they bottomed out right around here. You can see it in the chart. So if somebody caught the dip, especially the way I do it, it's okay. If I'm long the stock and I'm adding, I don't know why I would be adding. If I'm long the stock as an investment, that's fine. You can see how they're going higher lows. So they're buying dips. You can see dip bought, dip bought, dip bought. If the dip comes next, buy it. If you're holding shares, you might end up at 46, 47. But if I'm not long, I would wait for a dip to get long. Or give yourself room to add. So that's Uber. Home Depot. Not yet. Next one, we'll hit it. Okay, Home Depot. $294, $293. That was the prior sale. This could be the next catalyst and a whole bunch of buyers. So the next dip, I would buy. If I'm long, I get it. If I want to get long, you can twist my arm into selling a put spread or selling puts. Wait, stop. Earnings soon. Forget about it. I don't trade into earnings. I think I'd make more money, easier money, better decisions after the earnings. But I could miss it. Yes, I could. But the earnings reaction, the initial knee-jerk reaction, is a lot of guesswork. So I implore you to believe in that, the guesswork. I understand. So the Home Depot catalyst is at 303, and it could take you to 317, 320 if they can take it out. The dips are buyable. If they lose to 80, you will have the opportunity to get it in the 60s, 260s, 265, 262. Okay, those are two big statements, but remember we have an earnings coming. So earnings emotional responses can be definitely fantastic one way or another, up or down. If it falls, I think the company is good enough that I would buy the dip if it happens, and I just don't want to risk money on the emotional response on what people see in the earnings. Forget about it. Yeah, exactly. So having only 5 minutes left in the day, I totally appreciate you guys and girls taking the time to be here with us. This was a special session to make up for the Sunday session for the members. We do this all day. What is this? We stream live my screens all day and hang out with about 280 to 340 people every day. Charts going on, trade opportunities from me and other people. We're watching everything. So if you enjoy this, join the group. We have many ways you can reach us and find your way. And maybe we'll do this again on Wednesday. And I'm going to rudely hang up. Thanks a lot for the likes. Thanks for the eyeballs. And thanks for the support, gang. I appreciate it. Now go to the live room, which is over there on my screens. Later.